And let's also take a closer look at what's hot and what's not among retail investors. TD Ameritrade out with its Investor Movement Index for March. It tracks the stocks seeing movements from retail investors. And the big winners this month, names like Tesla, Rivian, and Ford. I'm sensing a theme. The losers, tech stocks like Meta, Nvidia, and AMD. Joining us with more is Alex Coffey, TD Ameritrade trading strategist. And also, Alex, what stands out to me is people were sort of net buyers of equities here. Are you seeing a shift here in people's enthusiasm for stocks?
Yeah, first off, thanks for having me. And of course, it's important to talk about exactly which time frame we're looking at. We're looking at the 5-week time that ended at March 31st. And as you mentioned, TD Ameritrade clients were net buyers of equities, but the actual total investor movement index remained unchanged. And so oftentimes that's a function of the type of names that are seeing buying interest. As you mentioned, there was clearly a theme among some of those automobile makers, but also notably financials were the most bought sector amongst TD Ameritrade clients, with IT being the one with the greatest selling interest. As you can see, the IMX did bottom out, at least for this most recent move, at the end of last year, much like we saw with the overall market itself. And it has started to build, at least on the first couple months, on a little bit of a positive upswing here, but was sideways for the month of March. I was excited to see ultimately what this number would turn out to be, given that momentum that had began to build to start the year. Didn't lose ground, but didn't gain ground either.
Yeah, it's really interesting, Alex, especially looking at some of the popular names that were bought, and including Tesla, Rivian, went on to see First Republic Bank as well within that, which was interesting considering some of the banking turmoil that had ensued. So all of these things considered, are you noticing that the retail investor is continuing to be more of a momentum trader, even in this market right now?
Momentum in the sense that as volatility increases, I think the attention on some of these names increases. Clearly, a First Republic is a key example of that. But they were buyers on balance of First Republic Bank when clearly the momentum was moving lower. So sort of a contrarian approach in many ways, particularly when you look at it on the sector breakdown. As I said, you saw buying into financials, which were down 10% or a little bit more than for the 5-week period. Yet selling on balance information technology, which was up closer to 11% on the 5-week period. So I would say that the volatility of names, of which Tesla typically delivers, garners some of those higher volume, more activity, more eyes on a name like that. But it's almost like a contrarian approach is being applied here. Attempts to buy into names that are perceived to be at a lower price and selling as names recover. Also a little bit of an indication maybe that those fears of economic slowdown haven't entirely dissipated. Risk sentiment remaining the same, but still net buying of equities, looking for value as opposed to maybe outright growth. Because bear in mind, even a name like Tesla has come down tremendously despite its red hot start to the year. So still a little bit of maybe buying of the dip taking place, if you can say that in a name that's doubled to start the year. Another one that I think really stood out to me was we actually break out a subgroup for population, and we look at millennials. Millennials actually did see that IMX go down by about 1%, and I think that is maybe unique to that age demographic of which I fall in. We don't remember 2008, 2009 like some of the older generations. This may have been that first kind of financial uncertainty, financial scare, and maybe was approached a little bit differently than our older counterparts.
And so what are the implications of that then? Are you saying that's maybe why people got out of some of the tech names, maybe just a little bit of sort of alarm at what was going on?
I think a little bit of a rotation into some of the names that had kind of sold off with the fear. Of course, the S&P 500 as a whole was up 3.5% during the 5-week period. A lot of that uncertainty was sort of front-loaded at the beginning of this IMX period. And so as those fears dissipated, I think there was a lot more kind of returning to some of these names, and of which technology had outperformed during that time frame. Names like Apple, that was also net sold, had actually been sort of a beacon of of quality, or almost like a flight to safety in many ways. And so I think there was some rotation out of outperforming names into underperforming names. But from the population breakdown, I think that there is something to that. I think that there is maybe just a little bit more fear that had been building up. We see that in sort of the everyday market headlines as well. And going forward, I think it's important to note that, of course, risk sentiment didn't change. It's just sort of where the buying took place was maybe names that are a little bit lower beta.
Interesting. All right, got it. Alex, thanks for being here. Alex Coffey, TD Ameritrade trading strategist on the IMX monthly data. Appreciate it.